thing here. If some people can just pay for this material alone, the person just chatted me that, see, I don't want to attend the training. I don't want any other thing. All I want is the material on financial modeling. And he paid immediately. You saw, okay. So it means this is the baba of them all. Okay. So we can just grab this, and you also know some other things. There are some people that are using this financial modeling just to eat for life. I know that man that collected that material wanted to use it in USA. He said he wanted to use it to present a training that day, this weekend. So I have to send the slide, the template, the calculation, everything. Maybe it's going to earn like $100 from that, and I'm collecting just that token. Well, he promised to pay more anyway. Yes. Okay, so let's get into it now. So what is different between accounting and financing? If we start from the accounting, we all know that we use historical information to prepare our accounts. So we want to prepare our financial statements, balance sheet, income statement, cash flow, everything we are preparing about or in the account. They are all about historical data. Are you getting that now? They are all about historical data. Then financing aspect of finance. That is why someone said, please, I need job in finance. And I ask the person, finance or account? Because sometimes we mix the two together and they are not even the same thing. They are not the same thing. But those who work in accounts can also perform in finance. Those who work in finance can also perform in account, but they are not the same thing. Their work is a bit different. Wow, that is a good one. How much is the financial modeling material calculation and slide? Okay, don't worry. I will talk on that as we move on. So here are some key differences and similarity between accounting and what? And finance. Now, focus and purpose. The first thing is that accounting primarily focuses on recording, classifying, and interpreting financial transactions. The main purpose is to provide accurate and reliable financial information about companies' performance. So what they have been doing for a year, for 2 years, for 3 years, then we use that to evaluate their performance. Are they doing well? How far? How much is their income? How much is their expenses? How much is their profit for that year? How much is their gross profits and the like? Okay. Why finance aspect of it concentrate on managing and optimizing financial resources to achieve the organization's financial goals. It involves making investment decisions, managing risk, and determining the best source of what? Of capital. So this one is now looking at the future. Accounting aspect is looking at the historical data. How is our performance? How have we been able to generate this and the like? While financing aspect is looking at the what? At the future. Like you are forecasting. If we have been able to work for like 2 years, we started this company since 2020, 2021, 2022, this is 2023. How far will our future look like in the next 3 years? That's where financing starts from. So we now forecast, we look at it. If we are making this also profit now, if we are having all this cash flow now, what is likely cash flow we have in the next 3 years. Okay, please, sorry. Why accounting generates information? I think we've discussed about this. Then interdependence. There is a symbolic relationship between accounting and finance, like we discussed. Finance relies on who? Accurate and timely accounting information for decision making. And accounting standard may be influenced by the financial practices and what? And of the business. So if Mr. Account is giving us wrong information, it means what we are also forecasting will be giving us wrong information as well. So they depend on us. They depend on our accurate information we are providing. Okay? Okay, continue, please. So let's go to financial statements aspect. The financial statements, such as the income statement, balance sheets, and cash flow statements, are common tools used by both accounting and what? And finance professionals. So what they are going to do in account, they are going to prepare their information based on income, balance sheets, and cash flow. When you two want to model, you model the the income statement, the balance sheet, and the cash flow. That's why we are looking at 3 statements of model. Then this statement provides a snapshot of the financial health and performance of a business. Then we also look at regulatory compliance. Both accounting and finance are subject to regulatory framework and standard. Accounting standard, GAAP or IFRS, guide preparation of financial statement, while financial regulation and laws govern various aspects of what? Of finance, like our CBN and the like. So they also guide the other aspect of it. Okay? Then, in summary, accounting and finance are complementary disciplines that work together to ensure the effective management of a business financial aspects. Accounting provides the necessary information, while finance uses that information to make strategic decisions and manage resources effectively. If you want to have a balanced company, especially if you go to like Dangote and all these multinational companies, they are going to have all the necessary departments. They will have account department, they will have internal audit department, they will have tax department, they will have finance department. So yes, legal and compliance. So there's nothing, if what accountant can do may not be able to do the financing aspect. Yes. 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 So once accounts are done with their own information, just give them how far we have been doing in the last 1 year. Management, okay, we are doing okay. So how can we do better in the next 2 years? They will pass it to finance. Finance also will model what is likely to be in the next 2 years. So once they model it, they will pass it to the management. These are the things that they say, okay, compliance, pass it to internal audit. These are the things. How are we going to achieve all this? What are the control we need to put in place? We are seeing risk here. How can we control this risk? How can we manage all this risk? Once they are done, they'll pass it to another department. And like that, everything, that is how you see when the company is having all the departments, the company will continue to excel, continue to push forward. And before you can compete with them, it will take enough of time. Okay. 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 You mean finance? Yes, it's based on assumption. Yes. It's based on assumption. You know, we are talking about future now. So you have not seen future. So there's no how you can give us their real figures. But your assumption you want to give us must be, they must be realistic. Are we getting that now? It must be realistic. Okay, so are we good to go? Can we start fully now? So now that I've introduced, okay. Yes. By the time we start this now, you will see more about that. Yes, we will talk more on that by the time we start.
Please, sir, I have a question, sir.
Go on, sir.
Okay, thank you very much. Thank you for this another moment of great learning with you again. So my question is, as in regards to accounting and finance, is it that do they come about that by the number of years each of them work as finance person and account person, or is by practicing or by qualification again, or as an accountant graduate, of course, should you not be able to work as a finance person in an organization? So I just need clarity on that. Is it maybe by profession I graduate as an accountant, maybe all the job I'll be doing is finance, and then maybe the other person is accounting job. Is that what differentiates them?
Okay, that's a good one anyway. So for you to work as an accountant, at least for you to have good leg in that company, is either you are a chartered accountant or ACA, Abi. That is for that is for accounting aspect. Then when you want to talk about finance, that's when you'll be talking about CFA, CFI.
Okay.
You understand? So they both have their own professional, but if you are a chartered accountant, you can as well work in finance. If you improve yourself.
Yeah.
You understand?
Yes, sir.
Exactly. So you can't say I'm a chartered accountant and you just focus on accounting alone. And that's why if you are a chartered accountant or accounting person, you can't tell me you are looking for a job. It's either you get a job or you start doing it yourself. You understand? And improve yourself. You have so many ways you can maneuver. There are so many areas you can fly over. So the sky is very wide for everybody to fly. It's very open to fly.
Yes, sir.
If you're working in my big companies, at least for me to take you as a finance person, at least you must have one certification that if anything happens, I can sue you or whatever. You know, if you're a chartered accountant and anything happens, they can report it to ICANN. If anything happens, they can report it to the ACCRB. If anything happens, they can report it to CFA. So that is why in all these top level, you can't just pick anybody and put them there.
Yeah.
There must be someone that is professional that if anything happens, they can report you to your professional body. You understand now?
Yes, sir.
For this finance, ICANN can still come. In Nigeria, don't worry. And now that's what I'm saying. Is it that you are? Hold on. You can either be. It's not compulsory. You have, even in Nigeria here, and you see their qualification, their profile. You will see HND, BSc, ACA, FCA. Then they will not put FCA, CPA, CFI, because they are building on the normal professional level of the local we have here. It's the basic. Others are just like additional. The local body that can satisfy you I don't think there's, but they have branch here. They will have branch here now. So they have now. They have branch here, but their headquarters. You know, in Nigeria, we have ICANN as headquarters. But their own headquarters is not here, but they have branch that can monitor and regulate. Okay, I think this is not what we want to do today. Okay.
Yeah, yeah.
We are still starting. We are still on the same page.
Hello, sir. Good afternoon, sir.
We are.
Okay, just hold on. Someone to ask question physical here.
Okay.
Okay. Okay. Professional certificate. They can pick you up and then. Yes. So they can pick you up normally, but you can join them. They will not give you strategic position. Hold on. Let's listen, please. It's just nothing. I was under him. I was doing ICANN. That was OPG. You know the first
For this wonderful studio start. Maybe one of these days we can have a section like this, share, we'll discuss, we talk about this career. So my question is that I felt that like accounting is actually very wide. Maybe being chartered, you can practice as a tax practitioner, as an auditor, and I felt that being chartered can make you to practice as a finance person because the like of this SFM. That's what I thought too. So I just want more clarification on that because like
yes,
SFM.
You are right. You are on the right path.
All right, sir.
So you can decide okay. Which way you want to go. That's why many people are running to accounting aspects now.
Okay, that means I'm right that being chartered, you can actually practice as a finance person. It makes you qualify to practice as a finance person.
Exactly. Right, so when you now get there, you can now improve yourself. You can go for CFA or any other finance aspect. Okay, so let's move it now, please.
And sir, we can. Okay. Okay.
Okay. Any other question? Or yeah, clear yourself before you. Are you satisfied? Okay, I guess she is. So now let's start what we are about to do now. So I've already discussed what finance and accounting, what they are all about. So now we have idea, we have information about the accounting aspect. So we are not going to mention anything about accounting again now. So we now want to start finance aspects proper. Are we good to go now? Okay, so this is financial modeling, and here we'll be talking about 3 statements of financial model, and we'll be using Excel. That's why you are seeing in Excel. So the 3 statements here is talking about the income statements, the balance sheet, and what? And the cash flow, okay? And from here, this is what we'll be looking at. So this one you are seeing here is the historical data. I believe you can see. Are you seeing my mouse at all? Okay, so this is our historical data, and this is what we want to build. This is how it's going to look like. So why is modeling looking like this? Is because there are so many formulas that you are going to make use of. And when you are looking at these formulas, And who do you want to report these things to? You want to report it to the management, Abi, for them to make informed decisions. Now, most of these, our CEO, our directors, don't have financial knowledge. So if you give them all these things, it will be difficult for them. They will not even understand. They will just look at it. They will get it and put it somewhere. But if you can use what we call visual, that is why you see this graph under the model. This graph alone will tell them something meaningful. So without looking at the figure, when they look at the graph, the chart, they can look at it that, okay, I think you are progressing from that to the top one, Abi. Then the second one is saying we started high, then there's a bit low in the middle, then we pick it up again and we are going high. Okay. So this graph now, when we get there. Don't worry, when we get there, we will talk about it. Okay, so let's go to the next one. Now, what is financial model? A financial model is a tool used to forecast.
Hello, sir. You are not sharing the screen, no.
You are not seeing. Oh, are you sure?
Yes, sir.
I can clearly see your screen from here. Probably is your network.
Oh.
But me too, I can see your screen.
Okay. I was afraid. Okay, so since you can see my screen, let me just move on. So we are in a definition of a financial model. So we say a financial model is a tool used to forecast a business financial performance into the future based on historical data and what? An assumption. I believe you are clear about that already. The historical data there is talking about the accounting aspect. Then the assumption is talking about the management has to come with their own assumption. So if you say last year we have 1 billion naira as our revenue, and we want to look into next year, then they should think about how much are we expecting next year as revenue. Let's say 1.5 billion, Abi. Then this assumption they are giving us, is it realistic? We will not look at it. If you say you want to make 1.5 billion naira in the next year, what are the things we have put in place to achieve it? Is it possible? Do we have the capacity? What you are selling, is it something that can continue to grow like that? For example, if you are selling cars and say you want to increase it in the next, is it possible the way the country is going? But if it is food, you can say it's possible because many people want to eat. So it depends on the industry. You must look at every factors that can contribute to that assumption. And that is why, as a finance person, you must look at the assumptions of the management to make sure that this thing is real. Not only that, any company can just contact you as a financial modelist or a financial analyst and say, please, these are the information we have in the past 2 years. And we want to model our financial for the next 2 years. These are the assumptions we have on ground. So you look at their assumption, you sit down with them and discuss. If the one that you think is not realistic, you will strike it out. You will ask them to give you more information. Why do you think we can achieve this particular goal in the next 2 years? So if you have enough information, you go ahead and use it as your assumption. But if it's not possible, then you advise on the necessary assumption to make. Are we good to go? So that is why what we call financial modeling. Then now, why do we build financial models? For anyone pursuing a career in corporate development, investment banking, FP and A, equity research, commercial banking, and other areas of corporate finance, Building financial model is part of our daily routine. It's what you have to do. You have to continue to project, to forecast for the future. Okay. Then for corporate bodies, we have company's performance and strategic planning. How are we going to plan for the future? Then project finance. So they are going to look at it, whether to invest in a particular project or not. So if you want to invest in a Dangote now, you have to project and see all the necessary things. You look at their revenue, look at their liability, look at their assets. In the next 3 years, are they going to be able to? Will you be able to get your return? Because we are all looking for return as investors. Are we good with that? Then corporate transactions, merger and acquisition. You want to merge or you want to acquire a particular company. Are you just going to go and meet that company? And there's what we call due diligence. So you must first get their financial statement, analyze it, project every necessity before you put your money on it. Say, see, I want to acquire it. So that you not go and acquire liability into your, and you not start rolling over. And that will not affect your normal company. Are we getting that now? So everybody must sit right, especially now that the auditor, some auditor, they have not seen any auditor's liability anyway. So just look at it, do it, and sign it. So either the financial information there are okay, accurate or not. And once you publish it like this and you declare that these people are making 1 billion naira in a year, everybody wants to go, there's money here, I want to invest in it. And once you invest in it, you just look at it that in the next 1 year, you won't be able to get they won't be able to get 500,000 as a profit. So where did they get that 1 billion naira last year? And so that's why you go deep into it and make sure that this information you are getting before you go into merger and acquisition or before you go into investment or whatever, you make sure that all this information are accurate. Then we also have what we call investment decision. So before you invest, valuation and equity research. So you must be able to value your equity, the share, what are the debts, and the everything. What are the source of financing this particular company and the like. Okay, so there are still more to talk about. Now, what are the types of models? There are so many types of models, but the common one is the 3 statements we are about to talk about. But it's more than, it's actually more than that. Okay, so just resume the slideshow. I want to put it on presentation mode. That's why you are seeing me waiting. I don't know what happened to it. It's not showing. Okay, so we have so many here. The first one is financial and forecasting model, option pricing model, 3 statements of model. We have DCF. This one is talking about discount. In this model, we are talking about future. And everything you are talking about, you are looking at it based on assumption. In the next 3 years, these are the things you are going to get. But is it possible that what you have